Good morning and welcome back to Almus Market Mornings. Commodities have been in focus as tariffs threaten to create market skews. Copper on US COMEX surged to all-time highs as traders price in possibility of hefty tariffs. This has significantly widened the gap between COMEX and LME copper prices. On the Asian currency side, Indonesian rupiah has weakened towards its all-time lows on the back of political worries. Good morning, JK. We are seeing some skewed market moves in certain pockets. Commodity pricing differential is widening. Some Asian currencies seem to be weak. Do you think these can trigger a broad-based risk-off moves?
Uh, Swaraj, good morning. Uh, yeah, I think market is preparing itself for the D-Day, April 2nd, when US government will decide upon their tariff policy on specific commodities as well as on reciprocal tariff issue also. So the market is definitely feeling more and more uneasy. And in particular, yesterday, of course, the copper prices did make a new all-time high on copper on commerce exchange. COMEX exchange. This was due to expectation that US might impose 25% import levy on copper. If you are an importer, you don't mind paying 5% more if you are expecting prices to be up by 25%. That is what is happening in copper. In fact, even in Shanghai, the copper prices have entered a kind of backwardation, which means that the spot demand or rather the spot price is much higher than the future expected price. So that all round demand for copper, which means that market is more and more convinced about the tariffs coming on the copper. So that's what is happening. That also shows why import into US is costlier, because that is where the prices are going to be higher due to the expected tariffs. Now, on the currencies, yes, you're right. There have been skewed moves. Suddenly, we found that the rupee was strengthening till the day before yesterday. A swift fall of more than 2% in just 1 week, and the dollar index was steady, and even yen was weaker. But the standouts were obviously the Indonesian rupiah, Turkey lira, and also somewhat Korean won also. All these currencies have been influenced by domestic politics, negative influence from the domestic politics. Indonesian rupiah and Korea won actually hit, they did not hit a all-time high, but they hit a low that was seen in 2008 financial crisis. And Turkey lira, of course, hit all-time low against the US dollar as well. So I think the current environment where the risk sentiment is not really, I wouldn't say it is extremely negative. It's not very positive as well. So in that scenario, market is trying to push those currencies which are vulnerable to the downside. That is what is happening on these currencies, and I think this can stay for some more time until the overall dollar situation is settled. I think we need to wait for at least a week more before we come to know about that. In the meantime, of course, the rupee steadied yesterday after an impressive gain of over 2% in less than 5 days, and then this strong buying was seen at 85.50 as indicated by us earlier, and it was more an inclination to buy importers at these levels, although even the head foreign currency liability holders also were seen active. Initial support came from buying from nationalist banks, perhaps accumulating dollars on behalf of RBI. Oil buying was also seen. External influences were moderately negative. Dollar index somewhat firmer. Asian currencies a touch weaker, and the domestic stock, which had a stupendous rally of 5% in the last 1 week, halted due to profit taking, and also perhaps the quarter end influence, even the settlement coming up tomorrow, and of course the key data and events that is likely from the US. So I still consider the recent strengthening in the rupee as a correction of the excessive weakness seen due to various negatives of some of the fundamentals had seen improvement, like trade balance, CPI, and also even the flows. But the broad fundamentals, like rupee is still a current account deficit country, and the rise in rupee should be accompanied by a larger secular fall, unless it is accompanied by a larger secular fall. It is not sustainable. Therefore, we will see a bounce in the USD INR from these levels, or even if it does go down a bit more, it will not be sustainable. I think even whether you are a trader or a hedger, these are levels to buy for the USD INR. Recovery to 86.2030 in run up to April 2nd event is quite likely. US session also saw some important data, but these were forward-looking surveys. One is the consumer confidence of the conference board, which hit a two-year low, and that actually slumped 7.2 points to 92.9, and the expectation was for a drop of about 4 points. This is not the two-year low. This is the lowest level since 2013. And the present situation index also was lower. The confidence data, of course, is quite influenced by what is happening on the political situation in US, the various new policies of retrenchment and expenditure cuts, and of course the tariffs as well. So that influences the consumer behavior and expectation very violently. That is what is seen. But even ignoring the consumer confidence, we even saw the manufacturing also kind of in a very gloomy situation, as per at least one survey yesterday that showed Richmond Fed manufacturing index also fell to -4 from +6 in the previous month, and a lot of drop in the shipment index. So new orders also decreased, employment situation was lower. So it is kind of confirming the unsettled situation as far as the US manufacturing is concerned. This is what we have seen in the earlier surveys also. But what should we keep in mind is that these are forward-looking surveys based on expectations that situation will worsen. But market will probably want to look at more hard data, and hard data will be available in the coming weeks. Of course, this week we also have the PCE number. That may not see much of a change. If you have to go by the CPI and PPI numbers earlier in the month. GDP, we will look at it closely as far as the consumer pattern is concerned, whether the consumption is lower or higher. Of course, even we'll also have the monthly income and consumption spending data that will come. So these are hard numbers which will actually guide the market rather than the expectations, which can be somewhat volatile. And next week, beyond and the April 2nd deadline for tariffs, we also have the unemployment data from US. Again, so far, despite all the layoff talks and all that, the non-farm payroll number or the unemployment rate haven't shown a major shift to the downside. Even the weekly jobless claims have been steadier. So I think that's the reason why market has not been able to push the dollar also too far down. In fact, what we're seeing is a bounce up in the dollar, of course, a bit supported by the yields as well. But I think market wants to see hard evidence of whether the US economy is really slumping or not. And until then, I think we expect a range to be quite maintained. Yesterday, Euro also saw some volatility, but all within the range, because the IFO survey from Germany was very strong. And these are actually, once again, influenced by the decision of the German government to take the debt break and more spending expected. But there is also the talk that, if Ukraine-Russia peace talk ends successfully, there can be a cheaper gas available to the European companies manufacturing. And that will be also a positive for the German economy. So there is a positive influence from the European region, but overall dollar direction is dependent on how the tariffs come about. Even Europe is not exempt from any of the tariff related tensions. So, although not said in many things openly about European tariffs, I think Europe is also preparing itself to meet that situation. That's the reason why dollar is in a holding pattern, slightly on the firmer side. And of course, the quarter end and month end also is influencing the dollar to be on the firmer side. So I think this is to continue in the next 2 days as we head into the year end. And of course, next week we'll see probably more volatility on the basis of the government's decisions on tariffs and then more data on US economy that is to be expected. Finally, UK also will be seeing spring statement from the chancellor, where seems to be in a very kind of a fix because the growth has not been good, and as promised, they are not able to lower the taxes, and they in fact they have actually been cutting spending by the government. Government is actually in a difficult situation, and they also have to spend more on defense after the recent decision by the American government to stop funding the Ukraine war. So something that we look forward to from UK as well. So I think suddenly we are in a slightly uncertain situation across the countries, regions. But rupee probably will also see some, weakness in the coming days in terms of global influence. Thank you.
Thank you, JK. And the broad-based uncertainty is having some sort of impact, especially as JK mentioned, all these uncertainty are pushing vulnerable currencies. That's the theme we are seeing, whether it's Turkish Lira or Indonesian Rupiah. All the vulnerable currencies are being pushed. So that's a theme we are observing for USD. And as JK mentioned, we have seen an impressive run for rupee, strengthening by about 2%. And from there, we may see some mild weakness towards 86.30.40. That's the levels we are seeing. Our dollar index remains steady. Yen was a little weaker. And of course, we discussed about the copper prices and the backwardation of the Shanghai exchange that's going on. When it comes to US data, consumer confidence hit the lowest level since 2013. Even the manufacturing index released by Richmond Fed, it indicated a weak print. So basically, these themes are in line with data that has already been released. Markets will now look for more concrete data points to assess whether the US economy is actually weakening significantly. That's it from us today. Thanks for listening. Tune in tomorrow for the latest in the financial markets.